morning, everybody, and welcome to the Daily Energy Markets podcast. It is 10:30 a.m. in the United Arab Emirates, of which none of our guests are in, which makes it all irrelevant to them. But they are all over the world, which is what is important to us to get some insights today after the big move this week, up 7% on Brent crude oil this morning, a little bit unchanged, a little bit down, actually, 65.79 on Brent, down about 20 cents, a relatively irrelevant move on any given day, but relevant today because it does appear the momentum, at least, that we've seen all week, and certainly yesterday, has kind of calmed down a bit in Asia this morning as we go into the weekend. Let's kick off this morning this morning UAE time, but of course late at night in the United States with Rad Al Qadiri, managing partner of 31032 Associates, to get some sense as to the seriousness of these decisions that Donald Trump has made and the US government has made regarding tightening the noose of sanctions around of Russia's oil flows, sanctioning its biggest oil companies. Rad, is this time going to be different? We're finally serious about stopping Russian oil flows. Your thoughts?
I think there is this, I mean, taken at face value, this is a serious move. In the United States, and under the Biden administration, under the Trump administration, has thus far tried to find any measure possible that didn't actually target Russian crude flows directly. So it was price caps, it was, shadow fleets, etc., but nothing that went after the production. In this case, it is going directly after the production, and that is a serious move. And I think that's what you're seeing the market reaction to. And, the market has to judge now, how much oil may actually come off the market as a result of this. 55% of Russian production is controlled by these two companies. Where the rubber will hit the road is on the implementation. So are we going to see tough implementation by US authorities of these sanctions? Are they going to follow through with tough measures? Or is it designed more as a warning, which Trump himself seemed to allude to, that they might not be on for long, expecting that there would be a Russian reaction. I mean, that's, I think, where you're seeing the sort of market holding its breath at the moment. Initial reaction to the news, and now waiting to hear what the physical impact really is going to be. But that will come down to the US implementation more than anything else.
And that's the key, isn't it, Rad? I mean, I would just follow up. If you're to buy into the seriousness of this moment, you also have to buy into the long-held 10-year narrative that Donald Trump and Vladimir Putin were somehow connected on the hip through some bromance unknown to all us mere mortals. Do you have to buy into it? The market seems to be buying into that maybe this bromance is over, or are these two separate things, do you think?
Look, I think the issue of the bromance has been sort of partly speculative. I mean, clearly
I mean, a
Trump.
red carpet in
Trump
Alaska, it was
no,
all
no, but
pretty dramatic stuff. I mean, God, guy's up for being to be arrested in the International Criminal Court. Trump's giving him a red
absolutely.
carpet in Alaska. That's a bromance. Come on.
Well, that was the bit I was going to add is, there's clearly some substance to it in terms of, Trump having sort of gone easy on Putin in many ways, certainly the US, but not just Trump. Biden was there as well in terms of taking easier measures, softer measures towards Russia, particularly when it came to oil markets. I do think what you're seeing is the mercurial and very personal nature of decision making in this administration. If you want one really good example of the imperial presidency, this is it, and how unsettling it can be for markets and how disruptive it can be for markets. This is an administration that can turn on a dime on the basis of presidential whim. Trump wants to be seen as the man who ends the war and ends it on his terms. It's not going to be on Ukraine's terms, and it probably won't be on Russia's terms either. But it's also part of this cart before the horse strategy that sort of creates ripple effects and disruptions afterwards. What you see is the president announcing victory, and then all of the bits that amount to what would be the victory have to be worked out later. You're seeing that in Gaza as well. So I think what it really gives you an idea of is not so much whether the bromance is over, but just how unpredictable US policy is, particularly when one man can change it on the basis of whim.
Well, speaking of one man who could change the world, Russell Robertson, Chief Business Development Officer at Abax Exchange. I suppose the first thing to say, Russell, I think this is the first time you've been at our table since you started your new position. And if it isn't, sorry, my memory is bad,
No, that
but
is it's the first time.
congratulations
Thank you.
on your new role. Let's look at this move in the price this week. $6, $7, any day of the week, any year, that's a big move in a few days. But ultimately, we're back to the happy spot of 65 on Brent. So what's the drama here? Your thoughts on whether this is a big move or the market simply returning to where it's been very happy for the last 3, 4 months?
Firstly, thank you for that very nice welcome. I'll come back again. Thank you. So always good to be here. Yeah, the market's had a very interesting move this week. I mean, $5, I think this just in the last few days. So I'm not sure I'd call it a correction, but we're definitely getting back into that trend that we've seen. If you look at some of the other commodities, I mean, my scope is a bit wider now than when we've spoken in the past. But if you look across different asset classes, we're seeing similar moves in different places, and it certainly seems to be more economical rather than necessarily fundamental or technical in the way they're moving. So gold and crypto and gas and oil have all had big redirection of moves this week. But if you look at them technically, they're still staying in the same sort of trends that they were in before. So it feels a little bit like a breather before the end of the weekend to me. And I'll be interested to see what happens over the weekend. We just have to look at what Trump's doing, don't we? And sell the rumor by the fact, maybe.
Well, we've seen already what Trump is doing this morning. It would appear giving another boot into Canada because he didn't like a little advertisement that ran, and all trade talks are off. All the toys are out of the pram. Osama Rizvi, global market and product strategist, primary vision in Pakistan, where all the wise men sits. And that's why I've saved the most important question for last. Your very important neighbor, China. The question for the whole world right now is, can China pick up the slack here if we buy into the fact that these guys are being sanctioned by America and all of the big deal that this might be, as Rad so eloquently shared? China could be the customer that wins again with even more discounted Russian crude. What do you think China's ability and appetite will be to pick up this slack that if others drop the ball?
Thank you, Sean. First of all, we need to look at how's China been performing recently, and the recent data shows that even the exports, oil imports, excluding the sanctioned countries, it has gone up 7 or 8% year on year, which means the demand, the appetite is still there. We're also looking at all the macroeconomic indicators coming out of China every week, and compared to the Eurozone or US or other countries or regions, China has held up steady, if not, on the higher side of the things. So I believe the appetite is still there. What matters is how serious these sanctions will get, especially the secondary sanctions. And is China, or will China be looking to challenge these? I believe currently India, China, there are unofficial reports coming out that they may be looking to curtail buying Russian oil, but I don't think in reality that is going to happen. We have good precedent, recent case studies where we have seen they have made some sort of arrangements with Russian oil has reached China, has reached India, has reached Turkey. So I believe this trend will continue. There might be some pullback initially, but who knows the secondary sanctions, with how much seriousness they will be implemented. So that's a wait and watch approach. But I believe business will be as usual for the rest of the year at least.
Rad, just picking up on that. I mean, ultimately, again, you buy in or not buy into the Trump Putin divorce. The other thing one would have to buy into, which is also being a bridge from Biden administration to the Trump administration, and that is every American president loves a low price of gasoline at the pump. It's a big deal for you Americans driving around in your ginormous cars. But where are we with that? Does Trump have wiggle room here to see the price of oil elevate, to hold the line, as you said, maybe that they're hoping the Russians will react and this will be a short-lived thing, or God forbid you get what you ask for and half of Russian oil is shut in. When GD Mackers, you'll be paying $10 at the pump there before you know it.
I think at this moment in time, there is wiggle room. If you look at the latest data in terms of average gasoline prices, they're under $3 a gallon, and it's the lowest for about 4 years. And I think there is also
The gift from Riyadh keeps on giving, is that it?
And I think that's the second thing, yes, that there is a sense at this moment in time that markets are well stocked, that global inventories are rising. There's some big numbers in terms of oil at sea. And I think that combination of things gives a certain amount of succor to policymakers in Washington that there is room for maneuver. And again, as I said before, you have wiggle room on the backside. It's not even a case of losing face and stepping down. It's a case of how seriously these sanctions are implemented. And as Osama mentioned, the secondary sanctions being key. That's the sanction that's going to worry most buyers of Russian crude. It is the risk of secondary sanctions, the risk of being blocked out of dollar markets and dollar transactions. If the US were to go after that strongly and to sort of really be robust in its pursuit, I think that's your canary in the coal mine. As an indicator of how far this administration is willing to go on this. But for the time being, I think there is a belief that, OPEC supply is sufficient and may grow, and inventories will tide them over for a wee bit at least.
Russell, we're coming into a period now where this is all built, well, a lot of it in the moves that we've seen before the Rosneft and the sanctions on the big Russian oil companies. In the days before that, we had the noise about India going to be retreating on its purchasing of Russian crude, and a big deal was going to be announced at the ASEAN summit coming to a theater near you there in Singapore. Your thoughts on where that goes? There's two big, ginormous possible trade deals that are being flagged: U.S.-India, U.S.-China. Your thoughts for that meeting, that for those to actually happen in the coming days in Asia, and whether that translates into a decrease in appetite to buy Russian crude?
I think the narrative does tend to be quite bullish before you get to these meetings, and the US administration is very strong-willed in the way they portray their messaging up and to, but we do tend to see that once you get past the conversation that deals do take place. I'm a big believer still, as we've spoken about before, that I do think that the relationship between East versus West is just changing over time. India is certainly not going to, in my opinion, stop buying Russian oil just because they're told to. They will roll it back. I think we all agree on that, but it's going to get done very slowly. So I think you're just going to see more and more China, India, South America partnerships taking place. And the US, I think, will gradually become less of an ally, if that's the right word for this discussion. But in that sense, you'll just see more business getting done in the global South.
Well, the business of getting done is the photograph behind you, which is storage across China. China will buy as much discounted oil one would think is they could put those boxes behind you. Is there more storage in China that actually could take advantage of this? Maybe yet another very unique opportunity to swallow up a lot of discounted Russian oil.
They could, but I think that the Chinese are quite loaded up already. Their inventories are quite high at the moment, so it's going to be difficult. But I mean, if prices stay down at $60, then why not? I mean, it's the bottom of the long-term range. So if you have to do some strategic inventory building, it's not a bad time to do it in the last few years of pricing. I mean, since July, we've come off $20. I mean, it's a very significant move for sure.
Osama, on that same point, looking at India, your neighbor there, very much caught between. We had this big discussion at our conference in Fujairah recently, the ability of Pakistan and India to navigate this sort of Cold War, if you want, this sort of with us or against us line. You're either with the West or with America versus China versus Russia, or you're not. Where do you think India are at? Can they maintain this sort of continuous, sort of fairly non-aligned, independent posture?
Well, when you talk about India, Sean, they do have more sovereign space than Pakistan, owing to their strong economy and the importance, the integration in the global economic system. So yes, they may be in a position to be independent in some ways, some themes, some domains for a longer run. When it comes to Pakistan, I think the discussion that we had in Fujairah, it still resonates very well. And we need to look at what's happening with Pakistan, its mining mineral sector, and once again getting cozy with the US. So right now, I'm both happy and concerned because Pakistan has is doing really well on the diplomatic front. Seemingly, they have informed the Chinese as well about their mineral cooperation with the US. The US is happy. We have sent our first mineral consignment to the US as well last week. So, and the company, one US company, has decided to invest $500 million in Pakistan's mining sector. So it's good. The Reko Diq project is going on, one of the largest copper and gold mines in the world, unexplored. But I reckon something like diplomatic challenges would entail after this. And even though we say that Pakistan will follow a multi-vector, multi-pronged foreign policy, um, I see a lot of challenges with Pakistan taking both the sides, the Chinese side and the US side. So that's for Pakistan, but India, sure, they can afford a little bit of it.
Rad, if one sort of follows through who are the winners here? I mean, this is, as you mentioned, a significant amount of Russian production, Russian exports. A lot of that exports have been finding well, all of them nearly finding their home in Asia. If they were to be, for this to succeed, who can win? Can the U.S. oil producers win? Is there excess U.S. oil exports waiting to rush into Asia to fill the gap that Russia would leave behind? Who are the winners here, do you think, from the market point of view?
It all goes back to the case of how seriously is this going to be implemented? So who are the winners here, I think, is partly what you're seeing in terms of the oil market taking a breath.
Well, in America First universe, is Trump thinking, oh, great, I'm going to give a big win to Chevron and Exxon here? Or...
I don't think the thinking is that sophisticated. I think this is a knee-jerk reaction. It's something that's been building for a while. Obviously, the Europeans have been pushing for it for a while and have taken their own measures. There's been coordination between the two sides. But I think it goes back to this issue of, you've seen the headline. Now, what is the substance? And that substance is going to determine the winners and losers. I mean, the losers obviously are going to be Russia in one sense, and just simply, even if it can continue to sort of export, it's going to have to do so at a bigger discount. So it gets hit, and it's hard to see that if this sanctions regime is followed through, that you don't suddenly get some impact on Russian crude and reductions in exports, reductions in production. I think, from a Chinese India perspective, are they going to be winners? Is this going to be cheaper Russian crude? That will depend again on how serious the US is about implementation and whether that's targeted. But they also sort of have to consider diversification of crude. I think some of the big winners out of this will be the Middle East producers, who can sort of naturally step in and fill some of these markets, and who are very keen to sort of expand their footprint even further in Asia. That's where they see their long-term, destiny lying. And fundamentally, those are the markets that they want to sort of ensure continue to take their crude. So, you may see yet another redistribution of flows taking place. The question then becomes, where does that excess Russian production, excess Russian exports go? And it's not clear that it has a home right now. And that in itself could sort of provide the disruption that I think the markets are signaling.
Let's go to the survey question, which obviously is addressing some of this key point. The latest flurry of Russian sanctions will end up in the land of no impact on stopping oil flows as all before them. Lots of sanctions, we know, in the universe of the world. Most Exhibit A, Iran, and Iran continues to export fairly uninterrupted. The latest flurry of Russian sanctions will end up in the land of no impact on stopping oil flows as all before them. Agree or disagree? Russell Robertson, now that you are unaligned and unhinged from the boat and the magic boat that is the DME and the GME, what dark secrets can you tell us about all things related to East of Suez benchmarks, starting with does a significant scale of this sort of an event have any structural impact on the pricing architecture, Dubai, Oman, etc.? What are your thoughts on that possible impact? Because this is a market that has already been exposed to some disruption, Murban priced below Dubai and so on.
I'd like to think I've always been partial, Sean.
No, I
no
don't
where
think
I
so.
sit, thank you.
Of course, impartial, but sometimes we're all restrained by certain parameters.
There's definitely structure changes. I mean, just this morning, if you look at Brent Dubai cash is trading at $3 above Brent. I mean, that's pretty significant. So to Rad's point,
related or this news flow or?
Yeah, I mean, well, that's been happening for the last few weeks. That's trending in that direction. Yeah. So to Rad's point, I mean, Middle East is definitely going to be a slight winner in this structure change. The arbitrage is opening for Murban as well. So, I mean, that you might see more Murban going east now, which is, again, good for ADNOC, building their market share there too. So, yeah, the structure change is not so much down the curve, but it's again, this look at different benchmarks, for want of a better word, and just the grade differentials that you're seeing changing dynamics. Again, WTI Midland into Europe is making a difference. And this east to west flow of oil is going to change and keep changing. And the more that Russian discount Urals comes into the business, I mean, is China going to pick that up? It's debatable.
I mean, the last few days, one of the biggest sort of, of all of the what might happen expectation is clearly, as Rad has pointed out, we have to see how these dominoes fall. But ultimately, what has already happened, which is quite significant in the market, is that what was looking out the curve to be a contango emerging on the horizon, backwardation is firmly back in the driver's seat. Your thoughts on that trend towards contango coming back, or is this backwardation going to lock in, you think?
Backwardation tends to lead into storage plays, right? And I think one of the big factors that's different at the moment to when we've seen backwardation before is there's a lot of additional supply in the market. So it's not necessarily just because the market goes backwardated due to the extra supply. It's normally gets corrected by people strategically storing fuel so that they can sell it later, put it very bluntly. That fundamental is not quite there at the moment. So I think you'll just naturally slip back into the contango for the time being. I don't see the backwardation play in there for the longer term at the moment. But to me, all the politics and the way that East and West is changing, we've been seeing that all year, and it's just not going away. Not that I see. So
when you say the East to West is changing, what exactly does that mean? I mean, that's obviously a narrative of 20 years. Is there something more specific in the recent time that you're sort of pointing out?
European politics is getting difficult, and it's certainly moving slightly away from the central region, as in the central philosophy. So European economics is not doing so well, especially if you look at oil markets, refineries, that type of business is going away. So that takes a lot of political power with it. So where does that move to? We're seeing all of the refining business opening up in Asia and the Middle East to that point. So you get a natural change of dynamics there immediately just from that flow of dollar-based business. But then separately this year, we're hearing a lot of discussion about the weakness of the dollar in the sense of its purchasing power. So if we start to see that going away, we're definitely seeing trades being done in Chinese currency and Indian currency, which is probably going to grow too over time. So to me, that's my understanding of the change in east to west. It's more about the underlying trade flows that are happening. And of course, oil is a major part of that, which goes down into the products.
Osama, I wanted to get your thoughts on something. I haven't had a chance to have your views on this since the news has happened. And it's not immediate, but it is very relevant to this turn to the east look and this diversification away from, security and other long-held positions for the Gulf states with the West and America and so forth. And now this recent agreement between Saudi Arabia and Pakistan on a mutual security framework. We would have said that for a long time, Saudi and Pakistan were already in a security brotherhood of sorts that had gone a little bit weak in the recent 10 years. Is that now back? I mean, there was a thing that in the relationship fell down in Yemen a number of years ago, and now is it back? How do you see this new framework, and how important is it?
Well, that's a very interesting question, Sean, because you are right. Security arrangements between Saudi Arabia and Pakistan, they are not a new thing. If anything, it builds upon the previous ones. Most of the categorical details have not been made available yet, or if they had, I hadn't had the chance to look at them. But I think there is a very interesting angle to this. You see, our relationship with the US, it had a roller coaster ride back in the previous 5 years. And as it has started to improve, we are seeing a parallel that our relation with Saudi Arabia has also started to improve. Because to your point, recently, before we were negotiating the recent IMF bailout package, there was a condition wherein we had to get debt rollovers and extra money to be put in our foreign exchange reserves, and we had quite a difficult time in convincing the Saudi side to do that. Whereas previously we have had deferred oil payments, we have had debt rollovers, and we have had Saudi dollars sitting in our foreign exchange reserves. So I personally, this is my personal point of view. I think that because Saudi Arabia and the US is also, key allies in the region, our relation with both the countries go in tandem with each other, and that is why we are seeing this. This is one angle, but on the other hand, there is an element of a reaction to Israel's unwarranted attacks in Doha, Israel's ongoing war in Gaza, the war crimes it has committed. So there is a reaction amongst the Muslim countries, and I don't get really driven by emotions here because international relations, they're like very different from this. But so far, Pakistan and Saudi Arabia and Qatar, the recent emergency conference, it gives us signals or trappings of a new, if not order, then a new regional arrangement amongst the Muslim countries to have something more categorical on the plate, because I think that angle has been missing in the recent decades.
Interesting. Rad, just to wrap up back to where we started and kind of get inside the baseball a little bit of this decision to ramp up the sanctions from Washington on Russia and on the targeted Russian oil companies. You had mentioned in your commentary earlier the imperial presidency, of which we are all very familiar with. But my point, or my sort of pitch for your consideration is that this move on Russia is actually a signal of the opposite, that indeed this is because this move is very much in alignment with the Senate, the wider Republican Party of the Senate, who have been advocating, Lindsey Graham being the sort of Exhibit A character, that the more robust sanctions be imposed on Russia. And they've had this whatever mass majority, or forget super majority, I think they call it, in the Senate, ready to go on this deal. So I just wanted to get your thoughts a little bit on inside baseball there in U.S. Politics, but that this is the opposite of imperial presidency reasserting itself from a wider political base.
I don't think the two are mutually exclusive in terms of the imperial presidency and, how the Senate feels about this. It's been, Republicans traditionally have been hardline on Russia, with some
I
exceptions.
mention it because I think it gives
No,
it
no,
a bit more
absolutely, but I think-
velocity, that
Yeah,
it's
no,
not
and I
just a
think-
whim.
I think where
Trumping.
it comes down to is, what drove the decision and where do we go next? That there is a, strong bipartisan feeling that there should be tougher measures against Russia has absolutely been there for some time, and that has sort of increased. Thus far, that's done absolutely nothing to sway the administration and to sway Donald Trump in terms of his policymaking. You mentioned the bromance. I mean, that happened on U.S. soil. In Alaska. So I think what you're seeing, and where I say the two aren't mutually exclusive, is absolutely, Trump can bend to the calls, or at least to be seen to be bending to the calls of the Republican Party, the wider Republican Party, and an effort to take a tougher line in terms of Russia. Will that actually manifest itself? And what is the decision-making process that ultimately leads to that change? But again, this isn't, this is the president imposing sanctions. This is, again, very much an imperial move, despite the fact that the Senate has been ready probably to sort of take stronger measures and actually sort of pass sanctions legislation of its own. So again, the Senate gets to have its way when Donald wants them to. And I think that's where you go back to the imperial presidency. And, Russia may test that my thesis, but I suspect that the president will want to ensure that he is in the driver's seat, and that the rest of the party and the other parts of government follow him, not the other way around.
Well, I suppose it's in that sense potentially a preemptive move, because I do think there was noises on the quiet inside the Senate running out of patience with this approach of the first 6-9 months of the Trump administration. Agree that this latest flurry will fail anyway, according to this room's vote. We'll post that on social and see where it goes. But I do think it's worth keeping an eye on it for any journalists that are worth their salt in Washington, if there's any left, to get down to the corridors of the Senate and find out how embedded this decision is, because I think that is where this will sustain or collapse. Rad Al-Qadiri, as always, thank you so much. Great to have your insights from Washington. Russell Robertson, again, Mabruk, congrats in Singapore, and Osama Rizvi in Pakistan. As always, great to have you guys. Have a great weekend, everybody. Catch up with you again next week. All the best. Thank you.
Thank you.
Thanks very much.